So, again, like I said, welcome back. And we'll start off right away by just giving a quick overview of what the challenge is all about. And this is for the sake of those who were not there in the previous class. And then we shall take it forward with more live discussions. All right. So, on this challenge, the next thing, or rather, what we'll cover in this class will just be a review on the reasons for the challenge. And I just quickly alluded to the fact that I had a strategy in mind on how to train you guys. And part of the strategy was to make sure that first people understand what Forex is, because for the longest time, there's a lot of misinformation of what Forex is and what it's not. Okay. And so it was very important for me to clarify that. So if you look at a lot of our first classes, first videos, we were just discussing what Forex is, what it's not, blah, 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 what a pip is, um, the pairs, currency pairs, and so on. And even then, we shared some books for your reading. So that was important. Then next, we initially allowed you guys to use whatever platform, anything you had, whether it is a phone, whether it was MT4, I didn't care. At that point, it was just important to get you guys playing around with it, which was important. And finally, I started narrowing down, saying, okay, fine, even if you're playing, let's see if you can make some pips. Show me you can make some pips. And initially, we didn't really care whether you were losing, whether they were negative pips or positive pips. But then eventually, we cleaned up our act and we said, okay, now we want a challenge 10 pips per day, which was very well performed. I think I saw almost 15 to 20 people who comfortably did 10 pips per day. And then the envelope was pushed and they said, why don't we do 50? And before I could even say how much, then the challenge was 100 pips. And the rest is history. Because from then on, you guys took off engines. Others were doing 1,000 pips, 500 pips, 300 pips. It didn't matter anymore. I was very happy, very, very proud that actually people were making pips in the group, which to me, being able to make the pips is the foundation of Forex. There are people who struggle even to make 5 pips per day. But I can say with confidence and pride that in this group here, I think those who have even come for this class, I think all of you can at least do 50 pips per day if you needed to. So then again, we narrowed down further to more detail, and that was the platform setup. I said, okay, now let's narrow down and use one platform. It's easier to manage the class when we are all speaking from the same script. And that's why I chose a particular platform, okay, which in this case is CTrader. I found that to be much, much easier, especially the web version. So if you follow through our charts, you'll find a link of the CTrader platform. And for those who still might not have it, all you have to do is type c.spotware.com and you'll get to the CTrader. Then we talked about the strategies to be used, which essentially are two: our sniper setup and scalping. So let me just move on quickly. So, like I said, our reasons for the challenge was you know what Forex is, you know how to trade and make positive pips, and you can have continuous profitable days. In that case, you could have 10 pips every day or 20 pips every day. That was good enough for me. But now we need to translate the pips into cash. And that to me is the game changer. Because now I'm training you, okay, to become traders. And to become traders, you must know how to balance the risk and profits. Many pips comes with a lot of risk. And I know that many of you have experienced that already. You start trading and you realize, yes, you're making pips, but you're also making losses, huge losses. And I think there's some even in this group who started with 1,000 and first went down. They actually lost a lot, and now they're just recovering. And we'll hear from some people's experience in the group shortly. Okay, but that is important. It's important because remember initially we were only excited about making pips, but making pips alone does not translate to money. So now we have to think differently. And for you to make profit, there's a fundamental objective that you must have. And that objective is your responsibility is to protect your capital at all costs. It's better you do a day without profit, but you come out protecting your capital, than go ahead, shoot for the pips, and then lose your capital. So it is a professional thing. Everywhere you go from now on, as you do trading and so on, the discussion will mostly go around capital. All right, your capital. So that's the platform, csportwear.com. Okay, the platform layout, very simple, very straightforward. If any of you still have issues, please reach out to the group, people in the group, they can help you. If it's very, very urgent, you need to talk to me, you can call me or you can send me a message, I will respond. Currency of choice, USD. Okay, I said US dollar because it is the most widely used currency in the world. Plus, it's the most volatile currency in the world. So let's use that for our trading. Later on, once you're an expert, it's okay. You can use whatever you want. But for here, for this class, we use the dollar. Then it's easier for me to compare and contrast, between one person and another person, to look at your performance and and give feedback. Okay. And our leverage of choice is 1 to 100. I went to depth trying to explain the dynamics between leverage and risk, which is the lot size. Okay, and I think I remember in one of the classes I told you guys that ultimately our goal now is to make money, right? So if we're going to make money, then we have to be very cognizant of what we're doing. So if M stands for money, so our money will be equal to the lot size times your leverage. Oops, they're the same, eh? Okay, we'll call this leverage. And we'll call this lot size LO. Times number of pips. That one you know already. So we know that the lot size, for right now, I'm locking you guys down to 0.01. I don't want to see anybody submitting a report that has more than that, because then you'll be cheating. Of course, if you do more than this, you'll make more money. But my goal now is not for you to make more money. My goal is to help you learn how to protect your profit. Then on leverage, again, I've locked you guys down to 1 to 100. Okay. So again, there are reasons for that, because now you have a small account. Okay. But I also want to give you the semblance of real life trading. So you'll just have to bear with me until you become profitable, until you can double the account. Then the other dynamics will come in. And like I said, I'll walk with you guys until you're there. But the fact that you're already here, to me, is good enough. It means you're actually good to go. Then the one variable you have control over is the number of pips. Now, as a strategy, I started with this. I made sure that you guys are comfortable in making pips. Very comfortable. And that is good. Big plus. because whereas you'll be constrained on the leverage and equally constrained on the lot size, but you'll make it up with the number of pips. So the money you get will be a product, which means the multiplication factor of leverage, lot size, and pips. Now, I'll give you a sneak preview. Later on, as you become comfortable as a trader, you don't really care so much about the pips anymore because maybe you're trying to build the capital. So there will be times when you may have to increase the leverage, but not for now, not for the challenge, because for the challenge, we're trying to build a discipline. We're trying to build a character. However, later on, maybe after we advance from this, after we're able to successfully double the account, then I will now allow us to start playing with different variables. And at that point, you will be amazed at potentially how much money you can make. And I can tell you guys for free right now, for many of you guys who made $13, for today, just for today, with a very small account of $1,000, it's because we are using a small leverage of 0.01. Do you know if we are doing a leverage of even just 0.1, then what you'd have made today is not $13. You'd have made actually $130. And that is at a lot size of 0.1, which for now you don't want to get there. The risk is very, very, very high. But again, we're trying to build a discipline. But once we have the discipline, once we know how to make pips, once we are aware of the leverage and all that stuff, later on, we can even do 1.0. Now, if you're talking about 1.0, lot size, for a small account as ours of 1,000, then you'll actually be making $1,300 for today. Now, you're not doing anything different. You're still doing your 1%. You're only doing 1%. But with 1%, with a lot size of 1.0, and the account is still small, this is what you're looking at. Now, I don't want to get you excited, but if your account gets to $10,000, now we're only talking about 1,000. When we get to $10,000, okay, and you're still, okay, let's pretend that you're doing the lot size 1, then what you'll have made, most of you today, you'd have made $13,000. Today, only $13,000. So what am I doing? Of course, I'm projecting. I'm just trying to show you the power of the numbers. All these numbers down here, all we have now is just to change the mathematics. And the money will come. All right? So, for now, be patient. Don't be excited. Don't run with a crazy number of lot size and leverage, okay? Because we're trying to build a discipline. Once we can build a discipline, then we'll go for the sprint. Now, all right. Okay, the next slide was actually just a little, okay. So again, for the purposes of this class and we call it our course that we've been running through, our goal is to show you 2 strategies. And I am sure if you go online to even try to look for them, you will not find them the way I have delivered it to you. No. Okay. What you'll find is just different versions, different thoughts. Okay. Which again is nothing wrong in hearing what they have to say. But what you have is the result of a lot of trial and error, a lot of failure, a lot of pain, a lot of losses from my side for me to be able to come with this. I have read different books, different authors, looked at very many videos. I don't even know how many, very many. So what I'm giving you is what has been filtered through, filtered and found to be working. So if you're diligent, when you do your sniper strategy, again, the videos are out there if you're wondering what it is. If you're diligent, there is no reason why, and this is the crazy part that I always tell guys, there is no reason why when you do the sniper strategies, even though I give 5 pairs, okay, basically 5 pairs, 5 currencies, there is no reason why you can't get 5 taking profit between 5 and, ready for this, sometimes even 10 out of 5. So I give you 5 trades. In a good day, you should be able to get at least 5 trades being positive, responding. But often it can even go as high as 10, double or even more. Why? Because the market goes up and down. Sometimes it crosses that line 2 or 3 times. So then it goes up again. Sorry, goes up again, comes down, goes up again, comes down. All right. So you'll be surprised that the sniper trader is very powerful. But the more important thing now to know is the time when it is most effective, most powerful during the London breakout, just around that time. Then the scalping. The scalping is basically my baby. This is my bread and butter because I only do 1 minute. I use the 5 minutes as a guide. But for you as a learner, you can use 5 minutes for trading, and you can use either 15 or 30 minutes as a guide. Okay. Again, if you want to know the details of how to trade those, I think we have them in the classes there. So the heart of our class today was just a little chat, but more importantly, to also get feedback from our brothers and sisters. Oh, yeah, sisters, actually. Yeah. But before they do that, I want to just go through some things that I have noted. I think right now, most of your reports are good, except 1 or 2 or 3 people. But still, the reports are very hard to read. Um, but the best way is just to make sure that in your report, somebody can see when the trades began. Okay, not so much when it ended, but at least when they began, because somebody can fake a report of the trading. And these funders, they call prop funders, normally very keen. They're very keen when the trades were taken, what time, how long was the trade. So ideally, you should have when the trade began and when it ended. And that you can find before you click on the statement. So if you look at your trades, you just at history, you can just right click and make sure the time beginning of the trades and when the trades ended is important. Now it's also important to have the number of pips there. There are a few things in there that are not very, very critical, but yeah, they're important, but not very critical. If we have a little minute, I'll actually probably project a sample of a statement. The other thing I wanted to share is, yeah, and maybe I think some of you are okay with it, but the idea of loss and take profit, okay, because they're doing scalping, uh, it's very, very, in fact, even the sniper trading, very important for you to put your stop losses and take profit. There are other bad habits, I call them bad habits, of not putting the stop loss. It is not a good idea, not a good idea, because the market can change within a few seconds. You can lose your capital, everything. So learn to take, put your stop losses and take profit. Yeah. Um, Another thing that I wanted to bring about. Okay. All right. Yeah. Time frames. Okay. So there is the time of trading and there is the time frames. The time of trading refers to the time you're sitting down in front of a computer to trade. And that could be the time that you have. I don't care what time it is, it could be the time that you have. Now, certain strategies become alive or are more powerful during certain times. For example, the sniper strategy is powerful, especially during before the London breakout, which London breaks out around from 10 o'clock, from 10 o'clock Kenyan time, 10, 11, 12, it's still breaking out, just, because the whole night has been dormant, still moving, but dormant. So the best time would be, from 10 o'clock. However, for those who don't have the time, you can set up your trades, okay, on a longer time frame. Now, what is time frame? Time frame is the specific candles that you use or the charts that you use where the candles are only moving at that specified time. If it's 1 minute, then the candle moves every 1 minute. You see a new candle. Every 1 minute, new candle. So if you look at maybe the last 1 hour, it will be, okay, last 5 minutes, then you'll have 5 candles. Okay, if the last 30 minutes, you'll have 30 candles and so on. 1 hour will be 60 candles. However, if you have a bigger time frame, then it takes 5 minutes or 10 minutes or 15 or even 30, depending on that candle designated. So I'm just saying this because people have asked me, so when you take a trade and you are on a 15 minute time frame, what does it mean? Does it mean that, the candles will not move, for 15 minutes? So there's a bit of confusion there, but I'm just trying to clarify that the time frame is the market that you choose. Okay, so they can be moving every 15 minutes, the candles, or every 30 minutes, or every 5 minutes. But the time of trading is a time of your choice. Okay, so now I think today, last time we had from 10, and then, oh, by the way, congratulations to everybody today. But today I want us to hear from Vincent, and I also saw some good work from Judy. That was amazing. And then there is Jackson. Okay. Yeah, we're just going to be sharing again. What we do is we learn from each other. That's why we've come into a group, because it's easier to learn from each other than to learn by yourself alone. All right. So maybe Vincent, if you have just 2-3 minutes, tell us, what you did today. But more importantly, remember these are people who are once like you. Okay, how you are doing it, and some of the things you've learned or you're watching out for. Hello, Vincent.
I'm going to unmute this thing.
Oh, are you muted? No, you're not muted.
And
Can you hear me? We can't hear you. I think I have just unmuted you. There. I think now you can talk.
hello?
Yes, we can
Can you
hear
hear me?
Yes.
Okay. Yeah, thanks very much, Coach. And thanks to the team. Okay, I don't know where to start. But one of the things that I've noticed is the sniper entries morning before the London breakout, what I've tried to do is to combine the snapper entries as well as analysis of the trends. Just to give me an indication whether the market will more likely go on the buy or on the sell direction. And then I actually try and watch so that if it triggers one side, I immediately kill the other side, because last week I had the situation where it triggers on one side, doesn't take profit. It triggers on the other side, doesn't take profit, and it keeps me hanging there for quite a long period of time. And then I end up on the losing side, on one side. So to try and manage that, I sort of, I enter both sides, but I do a preference on the side that the trending lines and the stop and resistance horizontal lines are telling me the market would go. And since I started that, I think I've gotten 100% positive on those trades. The other thing that I found is useful is just through back testing. For instance, if I look at the GBP USD, I draw the rectangle and then I measure the height of the rectangle, how many pips. And from back testing, what I found is that if I do 40% of the height of the rectangle, it always triggers, so that my take profit is actually at 40% of the height of the rectangle. It actually triggers, and it comes out positive. That for me has worked all the time. Then something which I'm also struggling with is just to manage the risk of loss. I've got two trades which I put in yesterday, for instance, and up to now they have not triggered. No, they triggered, but they didn't take profit. So what I did is I did back testing. I looked back and I looked at how far, if I move my stop loss to Mombasa, how far back did the market reach there? And I find something that was 8 months ago, and I move it there. I don't know whether that's correct or not, but it has helped me to manage my risk, so that in the time then that I have, the ones I did previously, they've come and triggered and taken profits, and I've avoided the loss. I know that for it to reach where I put the stop loss, the market would have to move for the next 6 months, but it has a higher chance of taking profit where the take profit is. Then the other thing that I've found is when I'm doing scalping, I only take trades when the trend is clear within a band. So if for example I want to do the 1 minute scalping, I first go to even 30 minutes. I draw the trend lines. I look at the support and resistances. Then I come back down to 5 minutes just to make sure that there is alignment, as Ken was saying. And then even with that, I then draw a trend line for the 1 minute. And I observe, say, over the last 1 hour, 2 hours, whether that trend is consistent. And every time I've done that, and before that, I then measure the height of the band. And if I see the height of the band, say, is maybe 10 pips, or something like that, or 12 pips, then I know if the market is on the uptrend, I wait for the market to, as it's going down, I wait up to the 25th, say 25th percentile, and I enter the buys there. And every time I've done that, when it goes up, I take the profit. That has worked for me almost 100% in all cases. The other thing I did was, just to finish off, I know the advised target was 1% capital gain. But then what I did is I decided that I'll take 3% because I know that there's some days I'm going to lose. So that on average, I'll end up at that 1%, so to say. Some days I lose, some days I win. So far, I think I've been lucky to be able to keep the 3%. Yeah, just a few comments from my side. Thanks, Coach.
Okay. All right. So our time is up on this. I have already sending a link right now so that we can I can kill this meeting and then we log in again. So there's no password. I don't put password. So you just click on it to re-enter. Okay. So I'm sending the link right now so that we all rejoin and we can be back on it again. All right. See you shortly.